Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, March 2nd, 2023. Before I jump into the charts, I want to encourage you to please click like and subscribe and share the content with friends and colleagues. And if you would, check us out at wickedstocks.com. We offer the daily the daily Triple Q report, the daily SPY report. We also do 2 individual stock picks every week, just like this. 5 to 10 minute videos. Earlier this week, we put out eBay. Tomorrow, Goldman Sachs. eBay's showing we actually present meaningful support that can be bought in that contract or in that market. Tomorrow's Goldman Sachs will be showing that. All on the wickedstocks.com, a premium subscription, a monthly subscription. You get a lot of good information every single day. So check us out at wickedstocks.com. Let's jump into the charts. I'd like to start with the big picture, work my way into the day. We came off in January, channel support, now in the 77.66 to 89.37 region, anticipating 246.92 as a 2 to 3 month objective that emerged about 5-6 weeks ago when we settled above the 150s channel structure, 150.33 to 158.44 this week, and that was brought on in part by favorable earnings that occurred about 5 weeks ago or so. And so at that time, closing above the 150s channel structure, we maintain a 246.92 2 to 3 month target, and we're about 5-6 weeks into that right now, and about, I'd say, 2/3 of the way there. On the way up, we did top out a bit at a long-term 3/8 Fibonacci. We didn't test it to the tick, but I'm going to say we pushed into the zone, let's say. 221.25 is still there above the market. You can see it in our support resistance area, weighted as a weekly resistance. And let's jump to the 2 to 3 week time frame. The channel bottom today at 196.37 has performed well over the last week in containing selling pressures, above which the 2 to 3 week time frame remains bullish. Expecting a retest, if you will, of the 221.25 3/8 Fibonacci, I'm going to say by the end of next week, and over the next 3 to 5 weeks, that targeted 246.83 long-term channel top on the weekly chart, 246.92. This area, if tested over the coming weeks, able to contain quarterly buying pressures, possibly into later year. We could fall off in a meaningful way from there, and if settled above, would represent a meaningful longer-term buy signal, probably through the rest of the year for Tesla. Let's take a look at kind of the day itself to the downside. 201.36, our soft intraday downside pivot point, can contain intraday selling pressures, and above which the 207.77 level is in reach today. That is a 5/8 upside Fibonacci over the last week and a half from the move high against the more recent low. 5/8 back up. Yes, we've taken it out, but it is only an intraday resistance. I'm not saying you can hang your hat on it, so to speak, for the day itself or into later week, but it is there. It's a soft intraday pivot point. If we push through or open above 207.77, the 214.24 high settlement price from a week and a half ago is likely within the day where we can place a daily high. And if we close today above 214.24, then expect the 221.25 3/8 Fibonacci within just another day of trade. That is part of a zone of resistance up to 222.84 that could contain buying through next week, and we could fall off from there. So there is a scenario that if we test 221.25 over the next, say, 3 to 5 days, we could fall back to the 196.37 channel bottom. That is sort of the 3 to 5 day swing trade, in my opinion. Buying 196.37, anticipating 221.25, selling 221.25, possibly on the short side, anticipating 196.37. We could trade inside this zone for a couple of weeks, perhaps. If we close above 221.25 and you're short and your time frame is 3 to 5 days, 1 to 2 weeks, my suggestion is reverse. Go long to 246.83. What does that mean, actually? If we dip into the 196 handle today, it could mean buying 220, 221 out of the money calls that don't expire for at least a week. I'd go a few weeks out, or perhaps buying 245 out of the money calls that don't expire for at least a month. You might go several months out. The further out you go, the more pricey they're going to be, the more expensive it is, but the more bang you get for your buck in terms of delta. You're less susceptible to the time decay element as you approach expiration. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. I think that kind of covers the upside, and I'm going to jump right to the downside with this image, that if we do close today below 196.37 and you've been going long anticipating the 220s or the 240s over the coming weeks, you may consider not only exiting that long position, but reversing entirely. Reversing entirely could mean buying 150, 155 out of the money puts that don't expire for at least a few weeks. You may go further out than that. There's a lot going on in the 150s right now, so if we close below 196, actually, let me back up a bit and say that if we break 196.37, 191.78 is likely. That is the pullback low following the high from a week and a half, 2 weeks ago. We could bounce off of there through the balance of the day, maybe. But honestly, if we break 196.37 in a convincing way, you should allow 186.29 on an intraday basis by the closing bell sort of thing. And once again, if we close today below 196.37, that is a sell signal into the 150s over the next 2 to 3 weeks. 154.83 is a rising 2/3 speed line. And of course, we have this long-term band of channel support I showed earlier. Here it is on the daily chart between 150.57 and 158.98. So this area becomes a 2 to 3 week target if we close today below the 196.37 formation. The 150 is expected. So once again, you may consider buying 155 or 150 out of the money puts that don't expire for at least several weeks. You may go further out than that. You'd have my blessing, certainly, because I think it's a good, I love option plays. There's a lot of advantages to them that I'm not going to get into right now. But, one of the bigger mistakes that are made are going with the less expensive options in anticipation of lower pricing, of course. Now, you can also get accelerated delta with an option that approaches expiration. It might not be trading at anything, and all of a sudden, within a matter of days, it's deep in the money on a big move. And that exponentially is a much bigger play than if you were to buy a further out, in terms of time, further out expiration. You're not going to get that sort of exponential play, but you will get a more reliable return in terms of delta, the rate of change of that option in relation to the underlying market. So there is my options trading 101. I think that pretty much rounds it out. I'm trying to think if there's anything left unsaid, and there really isn't. I'm going to leave you with this image for the day. That's all I've got. Please check us out at wickedstocks.com. Click like, and you might check us out at wickedstocks.com if you're interested in a Goldman Sachs analysis, or Uber from a couple of days ago, or Microsoft from a few weeks ago, Google, so forth and so on. I could go on and on and on. 2 a week that you never see on YouTube. You have a great evening.